welcome to this short session on research and development tax relief. My name is Eilidh Hobbs and I'm an assistant manager in the Entrepreneurial tax team here at Chiene Tait, and I specialise in R&D tax relief. The purpose of today's session is to give you a bit of background about the relief, who is eligible for it, and how we can help you to maximise any eligible claims.
So what is research and development tax relief? It's a government tax incentive that was originally introduced 20 years ago, and it's designed to reward UK companies for investing in innovation. It's one of the most generous tax relief schemes available in the UK, and it's a valuable source of cash for businesses, which they can use to reinvest in accelerating their R&D, hiring new staff, and ultimately growing. There are two schemes under which relief is available. Firstly, the SME scheme is the most generous scheme, and it's available to companies which fall below the small to medium enterprises limits for R&D purposes. These limits apply to the annual turnover, balance sheet assets, and employee numbers of the company. Or, if the company is part of a group, you may need to include some or all of the group's figures when assessing the size of the company for R&D purposes. There are other circumstances where companies that fall below these limits are not eligible for relief under this more generous scheme, which we will touch upon later. The SME scheme results in a benefit of around 33p for every £1 of qualifying expenditure. On the other hand, the RDEC scheme, which stands for Research and Development Expenditure Credit, is available to any UK company not eligible under the SME scheme. So that can be because they're large or due to the other factors that we're going to touch upon later. The RDEC scheme generates a credit, and how this is utilised by the company is determined by applying a 7-step process. Depending on the specific circumstances, an RDEC claim results in a benefit of around 11p for every £1 of qualifying expenditure. Both forms of relief will reduce or eliminate any corporation tax liability if the company is tax-paying, and if the company is loss-making, a claim will result in a cash repayment. Relief is, however, only available on specific categories of qualifying expenditure, which we'll go on to look in more detail shortly. So who can qualify? Relief is available to any UK limited company who are subject to corporation tax and are carrying out qualifying activities. It's also a requirement that the company is a going concern, and its going concern status is not reliant upon the receipt of an R&D claim. One common misconception is that the receipt of grant funding means that companies are not eligible for R&D relief. This isn't the case, but it does mean that relief will only either fully or in part be eligible under the less generous RDEC scheme. The same goes for projects contracted into the company by another party. There are certain factors that need to be considered in terms of the contract and the status of the party subcontracting the work, but it is possible that relief can also be claimed for under the RDEC scheme. Costs that are eligible for R&D tax relief need to be revenue in nature. Therefore, they need to be deductible for corporation tax purposes. Items like equipment and hardware do not qualify for R&D tax relief, but will be eligible for capital allowances. The first main category of qualifying expenditure is staff costs. Specifically, relief can be claimed on employees' gross salaries, bonuses, employers' national insurance contributions, and employers' pension contributions. These costs must be apportioned to reflect the time spent on qualifying activities, but HMRC don't expect companies to keep detailed timesheets. They just ask you to be just and reasonable. It's also possible to claim relief on reimbursed travel expenses that are essential to enable employees to carry out qualifying R&D activities. These expenses must be incurred by the employee and subsequently reimbursed by the company to qualify. Qualifying consumable items refers to items that have been used up, transformed, or wasted in the R&D process. This includes materials and also water, fuel, and power costs required to enable the R&D to take place. Relief is also available on licenses incurred on software that were used in the qualifying R&D activities. Next, payments made to externally provided workers qualify to the extent that they were involved in the qualifying activities. Externally provided workers are essentially agency workers who are under the direction, supervision, and control of the company. Payments made to engaged subcontractors also qualify if they were engaged to carry out a specific part of the R&D project. It is worth noting, however, that both externally provided worker and subcontractor payments are subject to restrictions depending on who the third party is and which scheme the claim is eligible under. So what activities qualify? There's a detailed set of guidelines called the BIS guidelines, that provide the framework for the relief. These can be summarised into 3 main pieces of criteria that a company needs to meet in order to qualify. Firstly, there needs to be a project, so a systematic programme of work being undertaken rather than just a eureka moment. Secondly, the project needs to seek to achieve an advance in a field of science or technology, rather than just increasing the company's own knowledge or capability. Finally, in attempting to achieve the advance, the project team faces scientific or technological uncertainties that cannot be overcome by applying routine methodology or by a competent professional working in the field. This criteria applies across all industries. Therefore, it's possible for there to be qualifying activities in any industry, not just your typical tech and life science sectors. Effectively, any company that spends money developing new products, processes, or services, or enhancing existing ones could be eligible for R&D tax relief. It's important to note that a company doesn't have to be developing a new product with a tangible output or improving an existing product. Developing or improving a process to gain efficiencies can also qualify. Projects seeking to develop something that has been made before can also qualify if how this was achieved previously was trade secret, or if a company is trying to achieve this within certain constraints such as cost, size, or energy efficiency constraints. Projects that have failed or have been abandoned can also qualify, and it often shows that the technical uncertainties were too great to be overcome in practice. I often find it helpful to have real-life examples of projects that qualify, so I've included a sample from a number of industries. Firstly, in food and drink, which is a sector that people often overlook. One project we've claimed for was for a food manufacturing company who was attempting to develop pre-packaged ready meals that could be manufactured in bulk, but that only used fresh ingredients and it did not include any artificial preservatives. This resulted in technological uncertainties in relation to the stability of the ingredients and shelf life. Another company in this sector were trying to develop more efficient methods of distilling their gin to increase output without increasing equipment size due to physical constraints within their distillery. This required the development of novel distillation techniques in order to preserve the flavour profile that their consumers were already familiar with. In engineering, one project we have claimed for was the development of new processes and the redevelopment of existing equipment to automate the delivery of uneven wood into sawmill equipment. Another project was for the development of sound barriers for use in multiple situations, such as at the side of motorways. The company had to utilise novel materials and develop unique designs to achieve the level of sound reduction sought by the project. In life sciences, we've claimed for a project where our client is developing a natural alternative to blue food colouring, and another of our clients is developing a novel blood screening technique to detect the presence of cancer within minutes, which would significantly reduce the length of time it currently takes using traditional scans and x-rays. Finally, in software, one of our clients is developing cutting-edge speech recognition software that generates full, expressive facial animations from audio input alone. Another is developing a satellite imagery platform that can automatically detect the presence of construction activities anywhere on Earth.
As I mentioned earlier, the guidelines can be applied across any industry, so qualifying activities are not restricted to the areas that I've focused on today.
So how can Chiene Tait help? Our approach to claim preparation has been developed to minimise your involvement to allow you to focus on the day-to-day running of your business. We will gather the qualifying costs from your accounting systems and draft these for your approval. We will then hold a short 1 to 2 hour discussion with the technical team to gather the information required to draft a detailed report for your approval, which will ultimately be submitted to HMRC in support of the claim. Our supporting report has been designed to provide HMRC with the exact amount of information they require to assess the eligibility of the claim. First and foremost, we are tax experts. We speak HMRC's language. However, we have extensive experience across all industries to be able to translate your technology into their language. So what should you do if you think you're carrying out qualifying activities? Please get in touch with us. We can set up a conference call to discuss the company's activities and determine whether there's scope to make a claim. So that was a brief overview of R&D tax relief. Thank you so much for your time. If you would like to explore this further, please do not hesitate to get in touch. I'll leave my contact details on the screen.